Hey guys, how's it going? Welcome back to the Real Talk Podcast. It's going to be a little bit different today. I'm on my own. I was supposed to have a special guest here with us, but something came up and he wasn't able to make it, so he'll be on next week's episode. But I want to go ahead and take advantage of this and talk about information for you guys in regards to mortgages, right? So I want to talk about a few things. One of the biggest concerns today, and it has been for a couple of days if you follow my Reels or my Instagram or Facebook or YouTube, you'll know that I have been telling you guys about down payment assistance programs raising the rates tremendously. Now, we also had a raise in rates in just regular conforming loans as well, which it is a conforming loan, but I mean just like a regular FHA or a conventional loan with no down payment assistance. Obviously, those are going up as well, but the significant increases have been on the down payment assistance programs. About a month ago, down payment assistance programs were about 1% lower. I want to say it was over 1% lower. So just to give you guys some perspective, on a home with $285,000 purchase price, with a 4.125 interest rate that was available about a month ago, your payment was about I think it was like $1,870 or something like that, or $1,900. And right now with the rate that's available, which is about a 4.875, and this is for just a regular FHA or conventional loan. This is no down payment assistance. You're looking at about $2,100. So keep in mind, that's just simply interest rate. You're keeping the same sales price, same insurances, same taxes, same everything besides interest rate. Once you change your interest rate, it's pretty significant what it does to your payment. That's one of the biggest reasons that I like to hear when people say, I'm waiting for the market to crash. In a crash market or in a down market, the people who actually are able to take advantage of that are investors or like cash buyers. Because if you know how this works, in a down market, what happens with interest rates? I don't want to get too far into it, but interest rates are determined by many factors, right? But it's all investor based, right? So there has to be a bank or an investor that will take your loan, right? And so whenever the market crashes and everyone's running with like a chicken without a head, what do investors do? They're like, wait, no, I'm going to take it easy. I don't want to let all this money be lended and then no one pays me back. So what do? Since the risk factor goes up, they rise their rates. So now if the price of homes dropped because of a crash market or a down market, interest rates are not higher. So you're buying lower, yes, but your interest rate is higher. So essentially you're paying more monthly. That's one of the things that many people don't understand, that if the market crashes and the price of homes drop, for one, they're going to go right back up. We had that huge crash in 08, 09 or 07, and look, price of homes are significantly higher now than it was even prior to the crash. So, that's just something to keep in mind whenever you're trying to wait. Also, keep in mind that rates are not forecasted to go down anytime soon either. And I'm not the one telling you this. Well, I'm the one telling you, but I'm not the one that's predicting this or trying to tell you that this is what's going to happen. I'm talking about professional mentors and people that do that for a living, that try to foresee what's going to happen with the market and the interest rates and stuff like that. I think it's projected that the interest rates by the end of this year or beginning of next are going to be pretty close to 6% or maybe even higher. I've been trying to tell you guys this for over 2 years now, that rates were just artificially low 2 years ago. And what's happening is that many of the people, around my age or younger, or, around the, let's say mid to high 20s or even 30s, when they started to look into buying a house, or they started to like get information on purchasing a home, it was around 2020 or 2021. So that's when interest rates were at their all-time lows, right? And we were telling people, take advantage, because this is not going to last forever. It's impossible for this to last forever. And some people did, some people didn't. Some people believed it. Some people think they know better. Some people just didn't get information. They didn't get informed. And so whatever the case is, now we're here at double the interest rates pretty much that was available back then. And again, we don't see that going back down. So you really need to take a second and kind of see, maybe I should look into it. Maybe I should at least get pre-qualified, look for a home, and if I love it, I'll buy it. If I don't, then I don't. But at least have your foot in the door like that, because like I said, chances are they're not going back down. And for those people that qualified for, let's just say, $325,000, 6 months ago, you probably don't qualify for that no more. See, what's happening is that about 2 years ago, when the rates were extremely, extremely low, what people don't really know, and it's not your job to get informed, it's our job to teach you, right? And what happened back then is it was just like, hey, you should refinance your house, or hey, you should buy a house because interest rates are low, but nobody really took the time to explain why, right? It's a huge topic, and there's so much to it, but the very, very simple way of putting it is that they were artificially low. Rates right now are not high, they're normal. What happened is that they were low. So many people were getting informed about buying a house back in 2020 or 2021 and seeing interest rates at 2.5, and they thought that was normal. So now that we're at 5%, everyone's like, dang, they're extremely high. No, they're not high. They're normal. It's just that in 2020, early 2021, the rates were just artificially low. That's a huge topic that people need to understand, that rates are not projected to go back down. Obviously we don't know, right? No one has a crystal ball, but chances are they're staying right where they are or going up even more. Same thing goes with the price of homes. It's forecasted for them to go up by 6% every single year. Now think about it. In 2021, California had an inflation rate, I think, of like close to 8%. That's crazy, and I don't think that's going back down either. So if inflation is 8%, best believe that's what homes are going to rise by, or even more. It's not like they're going to stay low or go down. If inflation is going up, that means everything goes up, not just gas and stuff. So that's something to keep in mind. Again, this is just information. I'm not trying to sell you anything. I'm not trying to tell you to call me so that I can sell you a home. I don't sell homes. I help you obtain a loan. That's all I do. But I like to provide information so that you can make an informative decision, because at the end of the day, you're only helping or jeopardizing your own future. Real estate is probably one of the securest investments, and I say it that way because it is an investment. You purchase your home today, within 5-6 years, you have $50,000 to $100,000 in equity, and if you hate being a homeowner, you sell your house and you made $50,000 to $100,000 in 5 years. Versus when you're renting, you're just paying and paying and paying and paying and paying. You never get that money back. So it's something to keep in mind. I also wanted to talk about two topics about qualifications. So one being, can I qualify for a home after I just graduated from college? The answer is yes. If you just graduated from college or a university, and you have your degree and you can provide transcripts, if you have a job in the field of study, so if you graduated, let's just say in criminal justice, and you now work in criminal justice, then you can qualify for a home after only 1 month of being at work. Just to put it in simple terms, your school transcripts will provide the 2-year employment history that you need. Okay? So very, very simple. Yes, you can qualify. There's a little extra steps, like we'll need your transcripts and your diploma, and we'll need proof that you work in the same line of work as you studied for. Okay, so that's number one. Number two is for those of you that are self-employed. I know many of you probably still haven't done your taxes, and that's actually a good thing, because I want you to keep something in mind. When you go apply for a mortgage, your loan officer and the underwriter and the branch or whatever, they don't go based off of your gross profit. Everybody, well, not everybody, but many people think that the bank will look at your gross profit and say, yeah, this business makes $200,000 a year, right? It doesn't work that way. If your business brought in $200,000 a year, but you're writing off $180,000 in expenses, then your business really only made $20,000. There's more to it. I would really recommend you sit down with a loan officer or your tax preparer. But don't, and I get why people write off a lot of expenses. Nobody likes paying Uncle Sam. But unfortunately, the bank goes off of net profit and you could use other things like depreciation. But keep that in mind, because I'm sure I'm not the only one that sees people come in thinking that they can go based off of just their gross profit or gross earnings, and that's not the case. Okay, so expenses, write-offs, as you would call them, they do not count as income. Okay. And then I also wanted to mention one last thing. This podcast is going to be a little short. Again, I'm by myself, and I just wanted to take advantage to inform you guys on a few things. The giveaway. So we had Eddie Gomez win, and the second winner didn't claim their prize. And then something else I wanted to mention. So on the Dodgers jersey giveaway, we told people to share the reel on Nelson's episode. The problem with that was that I wasn't being notified. So I thought that I would be getting messages into my direct messages saying like, this person shared your reel or whatever, or tagged you in a reel, because I know that it works that way sometimes. I don't know exactly what the problem was, but I know that a few people shared it, but I wasn't getting messages about it, so I didn't know who did and who didn't. So I would hate to do a raffle of only the 3 or 4 people that I do know that did it, when there was a lot more people that actually did it. So we're going to change it up. I'll go ahead and post a video about it, and to make up for the mistake of telling you guys to do it one way and now we're changing it up. To make up for that, we'll add another gift to it too. So it won't just be the Dodgers jersey. And I think we'll go ahead and include the tickets. So there'll be a total of 3 winners in this next giveaway. One person will get a jersey, one person will get the second set of tickets, and then we'll think of a third prize. Okay, so I'm hoping you learned something from this. If you have any questions, please feel free to comment, direct message me, text me, call me, email me, whatever you would like to do. But more than anything, I can't stress enough that you should just at least get informed. You need to at least be informed and make an informative decision before you either decide to buy or not to buy a home, or anything in general, right? If you're thinking of purchasing a car, get informed before you say yes or no. I think that goes without being said, that no matter what decision you're going to make in life, you should make an informative decision. Don't just say yes, don't just say no. Know what you're doing before you take that step. Thank you guys for being here. I'm hoping you learned something. Again, I hope you guys learned something. And if you have any questions, feel free to reach out. We'll see you next time.